From Washington to our TV and radio audiences worldwide, I'm Kevin Cirilli.
And from New York, I'm Taylor Riggs. Welcome to Balance of Power, where the world of politics meets the world of business. And we get straight to that world of business. Joining us now, Emma Chandra. Emma, coming off a little bit from the big record highs that we saw yesterday.
Yeah, absolutely. We're seeing U.S. stocks taking a bit of a breather today after that record-setting day yesterday. We should bring up a board here. We can see the S&P 500 down by around 0.3% there. The Russell 2000 off by 0.5, more than 1% off earlier in the session. This even as the Russell 2000 heads to a record-setting month of gains. The reason for that, perhaps a little bit of profit taking as we head into that Thanksgiving holiday in the U.S., but also perhaps investors casting a more wary eye after getting some of that weak U.S. economic data earlier today, perhaps living a little bit more in the here and now rather than a vaccine-brightened future. That pause in the rotation from growth to value showing up in a little bit of green in the screen there for the NASDAQ 100, up about 0.1%, but really it is a little bit of love for tech. And if we can switch up the board, we might be able to take a look at a terminal chart here, and this is from our MLive team over at in Bloomberg. They're sort of saying not much more love really coming for tech. They're saying that the last time we saw this bigger rotation from the NASDAQ to the Russell 2000 or from growth to value was right before that dot-com bubble burst about 20 years ago now. So perhaps tech investors need to hold on to their hats. Taylor, I also mentioned there, of course, that record-setting month of gains we're looking at for the Russell 2000. Let's switch up the board again because whilst we can see over the last 4 weeks double-digit growth for the Russell 2000 index, look at some of those gains for some of the better-known names within the Russell 2000. The likes of Fuel Cell Energy, Transocean, Express, all of them up triple digits. We don't get to say that very often. Triple-digit growth for those companies. And what those companies really do is they reflect the sectors that have been driving some of these gains. Fuel Cell, Transocean, Express really reflecting green energy, U.S. oil, and of course retail. Taylor.
Emma Chandra, thank you as always for joining us. Now, the pandemic has advanced technology at an astounding rate, with more companies taking advantage of new innovation, especially digital assets. Joining us now with his outlook, Ken Bentsen, the CEO of SIFMA. I have to say, reading through the white paper on digital security tokens is a read at 8 a.m. And, I think what is fascinating to me is you are really starting to see the benefits of some of this digital security tokens. What do you see as the benefit?
Well, there's no question that digitalization, things like distributed ledger technology are going to add, speed to processing, greater efficiencies, faster clearing and settlement, all of which can be tremendously beneficial both to issuers and investors. However, what we try and lay out in the white paper that we did with our colleagues at PricewaterhouseCoopers is how do you apply 100 years worth of securities regulation, particularly when we think about investor protection, customer protection, to a true digital security.
How do you do that?
Well, we try and raise in the paper a number of issues that regulators need to consider and are considering, to be fair. This is an evolving or emerging issue. We've seen companies looking to pay dividends through a digital asset. We've seen a digital offering, securities offering approved. We have an exchange being established that would trade digital securities. So all these things are going to push regulators to have to look and see how do we apply books and records requirements, customer protection requirements, clearing requirements, who needs to be registered between where you have the broker dealer who's already registered, the clearing entities, and who plays what role to make sure that all of these rules that have been in place for many years and work quite well apply in the digital world.
Well, let's follow it right there, because you and I got to know each other years ago during the fiduciary regulatory battles in the Obama administration when Senator Elizabeth Warren tried to really move the Obama administration to the left in terms of fiduciary regulations. So here we are at the cusp of a new technology that has already arrived, and you're saying right now that there are significant regulatory hurdles that could come up with a new administration. What do you foresee is on the regulatory horizon with a new administration?
Well, as it relates to digital securities, the new administration is going to have to pick up where the last one left off, and that is how do we map the current regulatory structure for physical securities, if you will, to digital securities? We think you need to do that, and I see no reason why the new administration wouldn't want to do that. There shouldn't be a parallel world that's not subject to the same customer protection rules as you have in the physical world. So I would think this is an item that obviously the new administration is going to have to deal with COVID when they walk in the door, no question about that, just as the current one is right now. But securities regulators and futures regulators are ultimately going to have to pick this up. I'd also note that, on the global stage at the international regulatory bodies and fora like Basel and the FSB and others are also looking at digitization. So this is not just a phenomenon in the US, but it's a phenomenon around the globe. So this will be an agenda item for the new administration for sure.
And Ken, so much of the reputational risk arises when there are some of these security concerns. I want to get to one of the points that you outlined in the white paper, which is this issue of getting things done a little bit more with more speed, more urgency, so to speak, and having more resolution in a more timely manner. What needs to be done to accomplish that goal?
Well, first of all, that's a good goal to try to achieve. And, over the years, when you think about just in terms of settlement of securities transactions, we moved for instance, from 3 days to 2 days for most securities transactions. You have, things like Treasury securities, which are much quicker. There's a lot of work behind the scenes. It's easy to say we can just clear in T+0, but there's a lot of work that goes behind the scenes, whether it's how you apply with asset managers and how they price securities throughout the day, how you apply with different jurisdictions in a global world. So the goals are always good, but the infrastructure, the plumbing, if you will, has to be retrofitted to accomplish that. So we try and lay out in the paper things like that, as well as other issues that regulators and frankly, market operations, market participants like our members and others need to take into consideration to do the work to make sure that you can accomplish the goals. But at the end of the day, you maintain the customer protection that is so important to market efficiency and transparency.
In the time that we've left, we'd love to get your thoughts on the shift to a work from home environment. How do you think that impacts your industry?
Well, the industry's done extremely well in going to working remote. You might think, you may recall back in March, early April, the industry went 90% working remote. It's probably on average back to about 70% now. I think a lot of people were hoping to get north of 50% back in the office by the end of the year. That doesn't look likely. And certainly, a lot of folks are talking going first and second quarter in working remote. I think what we're going to see, but having said that, operations worked extraordinarily well. And I think everyone's quite pleased with that, and knock on wood. I think going forward, and we're working on a lot of these issues with our members and with the regulators, we believe there will be some form of permanent working remote, either in a split shift fashion or in some functions just will continue to work remote in the post-COVID world. And again, we're going to have to map the rules around that that are not necessarily in place today.
Do you think, final question for you, Ken, before we let you go enjoy your Thanksgiving holiday, Gramm-Leach-Bliley Act, do we need a new Gramm-Leach-Bliley Act for digitization and tokenization and all these emerging technologies?
No, I don't think so. I think what we need is to figure out how we take the existing rule set and apply it in a digital world. And again, that takes a lot of work, but I don't think I don't think there should be a parallel universe in the digital world. I think we should just map the physical world across the digital world.
If it ain't broke, don't fix it. Or if it ain't, however that expression goes. Thanks to Ken Bentsen,
You got it.
SIFMA CEO. Thank you, Taylor. I knew, sometimes I fumble like Carson Wentz does with the football. Coming up, Peter Navarro, assistant to President Trump. This is Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg Television and Radio. I'm Kevin Cirilli in Washington.
And I'm Taylor Riggs in New York. We now turn to Karina Mitchell for our Bloomberg First Word News.
Taylor, thank you. The New York Times reports President Trump has canceled a planned trip to Pennsylvania in his effort to overturn election results there. He wants to meet with state Republican lawmakers examining accusations of voting impropriety. Pennsylvania has already certified that Joe Biden won the election. Trump supporters complained that observers were not allowed to be close to workers counting votes. Meanwhile, the number is stunning. In the UK, Chancellor of the Exchequer, Rishi Sunak, says the British economy will shrink the most in 300 years. Sunak told Parliament that GDP will decline by more than 11% in 2020. The government's budget office projects 5.5% growth next year, and unemployment is expected to hit 7.5%. And a memorial for COVID-19 victims in the Czech Republic was erected Wednesday in a public square in Prague near a World War II memorial of the unknown soldier. It's not known who is behind the installation. So far, the Czech Republic has reported 500,000 infections and 7,500 deaths. And one of the world's best soccer players has died. Argentina's Diego Maradona suffered a heart attack in Buenos Aires after successfully undergoing brain surgery earlier this month. That's according to multiple reports. Maradona led Argentina to the 1986 World Cup title and won league titles both at home and in Italy. But he struggled to cope with fame, and in his battle with addiction was front page news. Diego Maradona was 60. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Kevin.
Thank you. And now joining us from the White House is Peter Navarro, Assistant to the President and Director of the Office of Trade and Manufacturing Policy. Peter, great to see you. My first question is, there's been widespread reports that your office, as well as your colleagues, are going to continue to put pressure on China in the remaining weeks left in the administration. Can you forecast for us what some of your focus is going to be?
Kevin, I can tell you what we've done just last week. We had an executive order signed by the president, which cut off investment in Chinese companies that build the weapons to kill Americans. As to what else might transpire over the next several weeks, that's up to the president to reveal. What I'd love to do for you, Kevin, is just to talk now a little bit about our bread and butter, which is the economy. And we had a bunch of things come out in terms of indicators today and over the last week. And for me, I think what's really important, and for the people of America, is to understand that we're moving towards what could be a precipice unless we get to a phase 4 deal. And if I may, let me just tell you the good, bad, and the ugly. I mean, if you look at the data, we had an incredible surge in consumption, 40% increase in Q2, the highest on record. Home sales, both new and existing, are very, very robust. Durable goods is really a bright spot, core capital goods. And the GDP, as you know, comparing that to Great Britain, as you just said, is like we had a revision and it held at the 33%. And then the other good news about it is that the inflation is well below target. But here's the bad and the ugly. We saw uptick in unemployment insurance claims. We saw personal income go down. Now, both of those two things are related to what I describe as a trajectory of money that's been injected through the stimulus and relief package. And clearly, we're well past that peak. We're moving down into a place where the PPP program and the unemployment compensation programs.
Well, do you support Secretary Mnuchin's decision to try to put $426 billion back into a private account from the Federal Reserve? I mean, when so many states, as you know, are red states, blue states, are calling on there to be immediate assistance, why not just use the money that's already been allocated?
That's for Secretary Mnuchin to have that conversation with you, Kevin. But what I will say that I think needs to be done is in the phase 4, you've got a number of core things in there. The PPP program, which was the small loan program, was tremendously successful in helping small businesses, and it needs a top up. The problem we have, Kevin, is we're losing these small businesses, and what we learned from the crash in 08 and 09, that once you lose them, it's hard to get them back. So we really need to do that. We also need to extend unemployment insurance compensation, because all of that by the end of December, that's all gone in terms of the emergency, and people are hurting. That's going to hurt consumer spending and the like. So that's necessary. And then we had a really good stimulus with that $1,200 check per person that went out, and I think that would be what we need, is a bridge, a fiscal bridge to the point where the vaccines kick in and we're able to get back to a semblance of the regular economy. Having said that, though, is we do have these structural adjustments that are going to have tremendous impacts that we're going to have to figure out how to wade through, and that's going to be difficult as well.
And you mentioned those small businesses. I've heard from a lot of them, and they don't need more debt. Their balance sheets are full of debt. They need grants.
Yep.
How realistic is that?
Taylor, the PPP was structured in a way that it was effectively a grant. They were forgivable loans, so if you got that money as a loan and you complied with the terms, which is to say that you kept people working, among other things, then that's forgiven. So there's really no difference. I think if you just give people money without those restrictions, I don't think you get to that same result. So
some of the concerns, though, are that that's only if they keep people on their payroll. How do you give them grants even if they have to permanently let these people go because there is no money coming in?
You raised the conundrum here, because, Taylor, what we see, and in your earlier segment, you were talking to somebody about how people are working remote, and when are they going to get back to full and all of that. I mean, we have profound structural adjustments that are primarily hitting our major metropolitan areas, and restaurants, office buildings, the transportation sector. All of these things are going to change in ways which probably won't snap back to what they used to be. So we're going to have to figure that out. My own view is, and this is consistent with President Trump's philosophy, is that in order to offset the lost service sector jobs, we're going to have to make it up in manufacturing jobs, and that means bringing more of our manufacturing here. But one of the bad news is, part of the data was that our trade deficit went up. Our trade deficit's going up because we're buying more than we're selling. Part of that is because we are recovering faster than much of the rest of the world. But over time, what we got to do is create jobs here, and our best shot is going to be by creating manufacturing jobs, kind of in the Trump image, where particularly for blue-collar Americans.
Precisely, but I mean, The Economist, and I'm on my Bloomberg terminal right now, and it says Wednesday's data indicates that the economic rebound is becoming more tenuous amid soaring coronavirus cases, fresh lockdowns, and an extended deadlock in Congress over a new stimulus package. The markets are anticipating that there's going to be additional stimulus. I don't want to go to the talking points of Republicans versus Democrats on why there hasn't been a stimulus deal, but how do you, well, for both of us, but how do you actually break through this? Because you're staring down a December 11th deadline to keep the government open. You've got coronavirus cases. Respectfully, the data disagrees with you that it's just impacting the cities. It's impacting the heartland just as much. So how do you actually provide this assistance, not in terms of long-term restructuring, but right here and right now?
Yeah, well, these are the questions, and I think the conversation you and I and Taylor are having is the way, I think, to break the impasse, because we're having, I think, an intelligent conversation about what I describe as the second derivative problem. The first derivative, it looks like things are still getting better, right? But the second derivative is they're getting better at a slower rate, which means eventually that flips. So what I see ahead is a chasm as all of these programs expire and we struggle with these structural adjustments. I take your point that the heartland's hurting as well, but I would say that it's the major metropolitan areas that disproportionately are suffering pain in these service sectors. But the point, Kevin and Taylor, is that let's have this conversation. What I'm sending out as a message to you and the American people today is we can see what's coming. And if we can see what's coming and it's bad, we need to be able to avoid it. And the way to avoid it is basically hit those 3 points of the compass in a phase 4 deal, which was the PPP small business loans, a stimulus check, and more relief for unemployed workers. And if we don't do that, there's going to be a lot of pain in America, particularly. Look, and this is these lockdowns are a regressive tax, meaning that they hurt the people least able to afford it the most. These are the lower income service sector workers that have been kicked to the curb by the virus from China. And we intelligently, now the election's over, we as a country have to look at the chessboard and figure this out, but having this conversation is an important conversation to have.
Well, we're always grateful for the conversation that you're able to give to us. Peter Navarro, assistant to President Trump, thank you. And Kevin, we just take a look at where we are in the markets. We're coming off some of the record highs yesterday, but the Dow still on track for its best month since 1987. Those small caps on track for the best month ever. Tech still catching a bid today, having its best month since April. This is Balance of Power on Bloomberg TV and radio.
This is Balance of Power on Bloomberg Television and Radio. I'm Kevin Cirilli in Washington.
And I'm Taylor Riggs in New York. And we get back to those markets, Kevin. Emma Chandra here to break it all down for us from London. We're talking about Deere. Now they're raising that 2021 outlook, but shares slipping today, Emma, on the impact of the pandemic and, of course, some of those trade war subsidies.
Yeah, that's absolutely right, Taylor. So what we saw was the stock popping earlier in this session. Now it's come off a bit in the red, perhaps mirroring a little bit of what we're seeing across the markets as a whole. But the real story from Deere is that the industrial recovery is motoring, or should we say tractoring along, Taylor. And they put a really positive outlook for 2021. If we take a look at the next board, we can see estimated net income for 2021. That's close to $4 billion. Now, Bloomberg's opinions, Brooke Sutherland saying that that is close to what analysts had been expecting for 2022, meaning Deere is really a full year ahead of schedule. Now, what's the reason for this positive outlook? Well, two things really, Taylor. We're looking at Chinese agricultural spending tracking upwards. That's that's as a result of the part one of the phase one of the trade deal, also seeing higher crop prices. So what we've got are farmers with more money in their pocket, a positive demand outlook, and they're working with some of the oldest tractor equipment in more than a decade. That means they've got money to spend and a reason to spend. Kevin.
All right, our thanks to Emma Chandra. And coming up next, Pennsylvania, Lieutenant Governor John Fetterman. We're going to talk all about the politics of the Commonwealth of Pennsylvania. This is Balance of Power on Bloomberg TV and radio.
This is Balance of Power on Bloomberg Television and Radio. I'm Taylor Riggs in New York.
And I'm Kevin Cirilli in Washington, D.C. For Bloomberg First Word News, we go now to Karina Mitchell. Karina.
Kevin, thank you. In Hong Kong, Chief Executive Carrie Lam has vowed to keep strengthening ties with China. Lam used an annual policy address to defend Beijing's tightening grip over the city. She also announced new steps to boost economic links with the mainland. Meanwhile, President Trump reportedly plans to pardon his former national security advisor, Michael Flynn. That's according to politics website Axios. Flynn pleaded guilty almost 3 years ago to lying to the FBI about his Russian contacts. And U.S. airline traffic rose Wednesday despite warnings across the U.S. of a worsening virus surge and overwhelmed hospitals. Some Americans put concerns aside to travel for the Thanksgiving break in numbers not seen since the start of the pandemic. And increasingly, American students are attending school virtually. As of Monday, roughly 44% of students were going to virtual schools only. That's an increase of more than 5 percentage points from a week ago. More than 30 states saw school closing in the past 3 weeks. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Kevin.
Thank you, Karina. President Trump is reportedly canceling his trip to Gettysburg, Pennsylvania, where he was set to meet with Republican state lawmakers about allegations that he's made of voting irregularities. The Commonwealth certified its election yesterday, officially awarding its 20 electoral votes to President-elect Joe Biden. Joining us now from Philadelphia is John Fetterman. He is the Lieutenant Governor of Pennsylvania. All right, so President Trump canceled his trip. Why?
Oh, no. Too bad. Well, first of all, those aren't allegations. Those are bald-faced lies about Pennsylvania's election system. It worked actually beautifully, and we delivered a true result that, unfortunately for the president, named Joe Biden the winner, and that's how it is going to go. So why he canceled, I don't know, but it's not going to change anything. It's just a sad Amway meeting in a hotel ballroom in Gettysburg, and it's not going to have any meaningful impact on the outcome.
All right, I want to go back to the last segment where we just interviewed Peter Navarro, and he brought up manufacturing jobs. Obviously, manufacturing is such an incredibly important sector in Pennsylvania. How would a Biden administration, what do you want to see from a Biden administration in order to bring back manufacturing jobs to places like Pennsylvania?
Yeah, well, Joe Biden's all about build back better and made in America. And, I'm literally sitting across the street from a steel mill and, acknowledging the investment in these kind of industries that we already have here in Pennsylvania. U.S. Steel is poised to build the greenest steel mill in the world. And it would be amazing to have a president who truly understands that we can move forward with existing industries and make them green, make them more efficient, make them more environmentally friendly, so we can preserve the union way of life here and make as much as we can right here, not only in Pennsylvania, but here domestically. So I'm encouraged by everything that I know Joe Biden stands for, from what I've heard.
I want to talk a little bit about the economy. You've been a proponent of legalizing marijuana. We've seen some other states do it, but frankly, the revenue is never as much as the assumptions in the budget. Is this just another way to help try to close the budget deficit?
Well, I don't know if I agree with that assertion that the revenues don't always match. They actually often will match, and sometimes they will exceed that. But you know what? Compared to a state where weed is illegal, the revenue is zero, except if you don't count the drug cartels and the dealers. So the revenue that we're saying no to would be a minimum of $5 billion over 20 years here in Pennsylvania. That's a fact. So the idea of free money is always better than no money, especially when it's going to the black market. So I'm absolutely convinced that it's the right reason, not only for budgetary reasons, but also for justice and for freedom and from jobs. It's a no-brainer, to be quite honest with you.
And I know right now we're trying to balance jobs with a health emergency. And I am curious, on a day when New York topped 6,000 virus cases for the first time since April, what are you doing to prevent New Yorkers from infecting your Pennsylvania?
Well, we have a travel advisory where anyone coming from outside our state needs to isolate for 14 days or provide proof of a negative COVID test. Of course, this is voluntary, and we understand that there will be people that would ignore that. But the message that we're trying to promote constantly is this idea that to your point, we are having a surge of viruses all across our state and the region and the country. And this is a virus that has killed, there's going to be more than 250,000 empty chairs this Thanksgiving across America because of this virus. The governor here in Pennsylvania has insisted on new mandates with respects to masking and social distancing and events indoors, including banning alcohol sales after 5 p.m. This evening to prevent the so-called homecoming events that typically occur in bars across America when people are returning home for Thanksgiving and they tend to congregate in these closed air spaces and drink.
But how do you do that in terms of balancing the health concerns that are very real? We're all following, the data from Johns Hopkins, but how do you balance that? This is like a sucker punch to the gut of these small business owners, and many of them are Democrats in parts of Pennsylvania, for example, and they simply are ready to pull their hair out that they've got to shut down on a massive night of business in order to balance the health concerns, Lieutenant Governor, without any aid coming from Washington, D.C.
Yeah, well, first of all, we do need aid coming from Washington, D.C. I think that's what we can all agree on, no matter what your political leanings are. I mean, that's undeniable. And it does come down to balancing it act. Making money by promoting closed-in event space that has demonstrated that it's a super spreader of the virus is something that's reasonable to want to curtail, quite frankly. And it's the $64,000 question, balancing lives and livelihoods. And that's what we've tried to do in Pennsylvania. This idea that we must arrest this virus and flatten the curve as we did in the spring, give people enough time to adjust, give enough chance to stockpile the PPE equipment, as well as develop a vaccine, which we do have. And I just think everyone needs to understand that you doing your own little part is really the only thing at this point that is going to slow the spread of this virus. And I don't believe, I had a veteran say that, his grandfather fought in World War II, and what's being asked of us now to not go out and drink past 5 p.m. in a restaurant. You can still dine, you just can't congregate and buy alcohol. I don't think that's too much of a stretch. As sympathetic as I am to somebody who lives above a restaurant, is that for us to make it through this awful pandemic with the least loss of life.
Before you became Lieutenant Governor, you were the mayor of Braddock, Pennsylvania, and I want to ask you because. Well, and I want to ask you, though, specifically with regards to how small towns are being impacted, not from the economic fallout of the coronavirus pandemic. And there's been a lot of questions that you and other Democrats like you in the state of Pennsylvania have raised about how the United States should respond in the rebuilding after this in the global economy, especially with a Chinese Communist Party that's been on the rise. So what do you, again, to bring it back from a small town perspective, what do you hope the Biden administration will take away when they're dealing with Xi Jinping?
Yeah, I think without a doubt, we need to embrace the industries that we have. And as I mentioned earlier in our interview, I literally am sitting across the street from the footprint of what would be the greenest steel mill in the world. And we need these jobs. We need these union jobs. We need this steel. This steel would allow us to build and produce the strongest, greenest steel in the world to make sure our auto fleet can meet the increased EPA standards for mileage in our trucks and other vehicles. I can't overstate the importance of a facility like this, because if it gets built in a county like China, a country like China, where there's no environmental standards, no labor standards, no any kind of standards other than pumping out as much as you can, the environment and workers' rights be damned, it needs to stay right here in this country. So, right now here in Braddock is the battle of which you speak of, is that these kind of companies need to be helped to secure this investment and the American way of life and the steelworker way of life here, because we can't all work for Google as much as a lot of people would. I'm a 51-year-old man. I don't want someone telling me, "Hey, John, go learn coding." If you can't do your job again. We need to be, we need to realize that, we can't all go work at Facebook, or we can't all learn to code. And if we can do it in a way that's environmentally sound and that preserves these union family sustaining jobs, we got to do it.
So what is the one single policy that will ensure that success?
Well, one, recognize that China is an adversary economically, speaking for sure, and that this country still needs to make stuff. I'd use a different word, but stuff. We still need to make stuff in this country.
Thank you. I appreciate it. I'm not trying to get in trouble on the turkey eve. Go ahead.
I can appreciate that. We still need to make stuff in this country, and I refer to what we have the ability to be the world leader in the manufacturing of responsible green steel right across the street in our community, and we need to double down on these kind of investments, because from a strategic standpoint, if we're all downwind globally, so to speak, from an environmental perspective, if it doesn't get made in this country with strict environmental standards, it gets made in a country that has no environmental standards, and that ultimately is going to contribute to climate change the way it would no matter where it's being produced.
All right, I grew up in Delco. I got to put on my PA politics junkie cap for a second. Are you going to run for Senate or governor?
Yes.
All right, we'll leave it there.
One or the other. Well,
one or the other. When are you going to make the decision by?
I really don't know. But I just want to remind your viewers that the Steelers are undefeated. And so, yeah, there's that. So.
Oh my gosh.
And you won't tell
There's
us
not
which
enough
one.
time. We'll leave it there. I'm gonna be polite. No, but truly, thank you.
Truthful. Yeah, but yeah.
It's already a rough enough season for the Philadelphia Eagles, Taylor. See, we gotta wrap this. This is gonna go off the rails. Thank you to John Fetterman, the Democratic Lieutenant Governor of Pennsylvania, and I guess not a Philadelphia Eagles fan. And coming up in the 2 p.m. Eastern hour, we'll be speaking to the CEO of Aura Cannabis, Miguel Martin. This is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm Kevin Cirilli in Washington.
And I'm Taylor Riggs in New York. And Kevin, we want to get right to it. Chip Rogers, American Hotel and Lodging Association CEO, joins us now on what was supposed to be a busy holiday season. And Chip, I'm just wondering what some of your constituents and members are saying about how tough this year is and when they think an end in sight may be.
Well, it is very, very tough, no question about it. It'll go down on record as the worst year ever. But people have understood that really since this started back in March. When we look ahead to when we believe that the rebound begins or the slow crawl out of this begins, we're really looking at the spring. And that's assuming, of course, the vaccines are beginning to be distributed widely across the U.S. and the globe, that therapeutics continue to improve, and that we have good, safe, reliable, and inexpensive testing. If you put all those three things together, April might be a month we start to come out of this, but the next 4 months are going to be brutal.
And that sounds really exciting, but the problem is a lot of people can't make it until April. How many people are saying that if without help, April doesn't even exist for them?
Yeah, that's the most alarming statistic we have received from our membership across the board, and that is that about 70%, 7 out of 10 hotels say they can't make it more than 6 months if there's no help at all. Keep in mind that CARES package that was originally signed by President Trump back on March the 27th was expected to last only 8 to 10 weeks. It's even written into the legislation, 8 to 10 weeks. That was gone a long time ago. And the idea that they haven't done anything since then, it's really frustrating to a lot of people. They seem a little bit more concerned with their own reelection than the jobs of the people they represent.
Chip, frustrating is putting it mildly, according to the conversations that Taylor and I have been having throughout this. So appreciate the neutral word and the candor. But moving forward, just from an industry perspective, can you talk to us about how your industry is planning for the second half of next year? Because as you know, so many of these conferences and various conferences in cities like Las Vegas, for example, are planned 6 to 9 months, even a couple of years out in the future. Are you starting to see a rebound in the second half of next year?
We've begun to see planning on those events, for third and fourth quarter. But what you point out is so critically important. We've got to have business travel come back. Leisure travel has been the only type of travel that has sustained us at all, and that really hasn't been what we needed. And it's great. But the reality is that about 60 to 65% of an average hotel's revenue comes from some sort of business travel. Our studies show that only 8% of people have taken a business trip since March, and strangely enough, only 8% plan to take a business trip during the first half of next year. So that's the real problem, is that business travel is not happening.
I want to bring you some breaking news and just interrupt this conversation. We are hearing from Treasury Secretary Steve Mnuchin, who's speaking in an interview here with us at Bloomberg News, saying that he does have an excellent relationship with Fed's Jerome Powell and defending sort of the record of close coordination that they've had with the Federal Reserve during this crisis. This, of course, Chip, as we continue to talk about stimulus that is still needed and more coordination from Washington to get us through the next 6 months. As you just alluded to, what specifically would you like to see? Earlier, we were having conversations that a PPP loan isn't enough. I mean, we're all full of debt. We need grants and loan forgiveness. Have any of your members floated that idea around?
It's really interesting that you just mentioned Secretary Mnuchin, because if you recall, once the CARES Act was passed, I can still vividly remember him standing up and saying that the PPP was good, but what was going to be great was the Main Street Lending Act, because they could really use that money and leverage it into trillions of dollars into the economy. Well, if he were to be given a report card on the Main Street Lending Act, it would be an absolute F, because it hasn't worked at all. Yeah. I don't know of a single hotel anywhere that has received a Main Street Lending Act loan. And you're exactly right. PPP is good, but it's only meant for the very short term to get you through a gap. For so many of our real estate asset-heavy hoteliers, which is just about all of them, I mean, they've got to pay their mortgages. They've got to be able to service their debt.
I want to follow up on this because this has been the common thread from the Fed to the Treasury Department over the last week, that Secretary Mnuchin has asked for $426 billion to be returned back and put in a Treasury Department fund that would need congressional approval for whomever takes over after he leaves office. In this case, likely going to be a soon-to-be confirmed Treasury Secretary Janet Yellen, and that sets up a significant fight. My question to you, Chip Rogers, could your industry benefit from some of that $426 billion in those lending facility programs right now?
Absolutely. We've been begging for it for months. But the rules were set up so that anybody who has an asset-based business really can't gain any access to the Main Street Lending Program. You see the numbers. He got $500 billion, and now he's returning about 85% of it. And it almost makes no sense, because the theory was that some of these loans may be bad. That's why they're not lending them out. Well, now he's asking that the money just be given out through a grant process. So it really doesn't make any sense. And yes, that money could be used to save thousands of jobs right now today.
Chip Rogers, so grateful for your time. American Hotel and Lodging Association CEO. I do want to get back to our Bloomberg exclusive. Our print colleagues just spoke with Treasury Secretary Steven Mnuchin. Bloomberg's Mike McKee joins us. And Mike, you know the intersection of Treasury and Federal Reserve more than anyone else. Your take on these comments?
Well, the issue has been whether or not the outgoing Trump administration is trying to hamstring the incoming Biden administration by taking the money away, making it harder for them to use in the future. Secretary Mnuchin defending his efforts and suggesting that it did not cause the kind of rift with the Fed that has been reported. The secretary saying that they speak multiple times a week, they're in close touch, and that they have an excellent relationship. And he said that the Fed knew this was coming, that he had discussed it with Jay Powell. It wasn't a new or sudden issue. I spent 2 weeks in the Senate and sat with Senate staff and drafted word by word by word. There is a clear date that is the expiration. That is not as clear as the secretary makes it out to be, in the sense that it is understood that he could have extended it and he could have let the Fed make loans up to the January 31st deadline. But with this money supposedly going back, and we're talking about $260 billion, not $454, because they've already spent a good portion of that on not just on the Fed lending programs, but the airlines and other bailouts. That this money is going to have to go back sometime at the end of the year, but it takes a while to process loans. So the Fed said today it's stopping its lending as of December 14th. Banks have to have their proposals in, their loans into the Fed by December 14th. And so that is the new deadline.
All right. Thank you, Michael McKee. Let's bring in, to continue this conversation, Congressman French Hill, who is, of course, a Republican from Arkansas and a member of the Financial Services Committee, to get some new, fresh reaction. This as Treasury Secretary Steven Mnuchin, Congressman, speaking to our Bloomberg print reporters, defending his relationship with Fed Chairman Jay Powell and the strategy that he's been utilizing that has garnered support, we should mention, by Senate Majority Leader Mitch McConnell and the likely to be chairman of the Banking Committee, which will oversee the Treasury Secretary confirmation process, Pat Toomey. Is Secretary Mnuchin right with this policy, or should he, as we just heard from Chip Rogers of the hotel sector tell us, should they be lending to industries that need this money now?
Well, let me thank Chip Rogers for his leadership. Thanks for the invitation to be on the show today. Chip's right in the sense that the Main Street program should have included, in my view, a Main Street lending facility that facilitated something that was a collateral-dependent loan or a second lien type loan, But the Treasury and the Fed just could not get comfortable with that, and they collectively rejected that idea. I think Chip's right about it. I advocated for it both as a member of the House Financial Services Committee as well as a member of the Congressional Oversight Committee for the CARES Act. Secondly, if that money is coming back to the Treasury, it's an opportunity to reprogram those funds, both for the PPP program and add something to that where we have $138 billion that we've been trying to get extended through Speaker Pelosi for PPP. But, Kevin, I'd put this on the table for our hoteliers and our restaurant folks who are still struggling due to the lack of travel and new shutdowns. And that's Senator Marco Rubio's idea of a pandemic 7A loan program from the SBA that he's introduced in the Senate. It might be a productive use of some of that reprogrammed money coming back from the CARES Act.
Congressman, we only have about a minute left. What should Janet Yellen do day one if she is indeed confirmed as Treasury Secretary?
I think Janet Yellen should make recommendations to the Congress on what additional support the Fed needs to be on the look for economic conditions. Are they going to continue to improve? She needs to have that plan, and if they're going to deteriorate, she needs to have that plan both. That's what she needs to come and communicate to Congress.
All right, Congressman French Hill, a Republican from Arkansas, you're going to stick around and join me on Bloomberg Radio in our next hour, so we appreciate your time. And also ahead, former Pennsylvania Governor Mark Schweiker with regards to what's been happening in the Keystone State.
Amazing, Kevin. How many more hours of radio and TV do you have? 6? 5?
What? Taylor, I'm thankful. It's Thanksgiving. And I want to wish a happy Thanksgiving to you, Taylor Riggs.
To you and all of your Eagles fans that we've loved hearing about in the past 3 days.
I know. I can't help myself. But what's your favorite pie, Taylor?
Pecan, just like Ian Bremmer, right?
Happy Thanksgiving. Gobble, gobble. This is Bloomberg.
Bloomberg TV and radio.